Today we are looking at Activision Blizzard Inc. ticker symbol ATVI. As you can see, it got absolutely hammered, went from $77.5 a share to $66.75 a share, down 14% on the day. We're going to be going through why that happened. Then I'm going to be looking at the fundamentals and giving my fair value of the stock using discounted free cash flow and the Buffer Graham intrinsic value. Then we're going to have a little look at some of the technicals. Before we get into that, please give a like on the video. It really helps me out. Subscribe if you're not already. More videos coming. Anyway, as you can see, it went from $77 to $66 a share. Earnings, surprisingly, they did have earnings on the 2nd of November and they did beat earnings by 0.02. It was a surprise, and they beat it by 3.26%. So it wasn't to do with earnings. If we just quickly go to this article from the Wall Street Journal, Activision shares tumble on game delays. Video game giant says it needs more time finish making Overwatch 2 and Diablo 4 after leadership changes. The market reacted pretty poorly to that, and as we can see, the shares took a tumble. But we're not here to look at that right now. We're here to look at the fundamentals of the stock. Activision Blizzard Inc. market cap of just under 52 billion. Communication services share price currently $65.91. 52-week low of 64, so it's almost at that 52-week low, and the 52-week high of $104 a share. So if it gets back up to that $104 a share, it's a nice investment. Dividend of 0.61%, and the ex-dividend date is in the future. It's the 14th of April, so you'd have to buy it before then if you want it. So firstly, is the P ratio less than the market? 20 to 28.5, that is a pass. Next is their revenue increasing 7.5 billion to just under 9, so that is a check there. Profit, I would hope that is also increasing by a wider margin as well, 1.8 billion to 2.6. That is very good to see. Are they buying back their shares, or are they issuing new ones? Naughty Activision Blizzard. They are issuing new shares, which is a fail. That is bad. They're diluting investors from 754 to 771. Is their free cash flow increasing? Yes, it is. 1.6 billion to 2.5. So that is a pass. So what does that give us in terms of that? Well, it gives us 5 passes and a free cash flow rate of 20, because it's market cap of 52 billion divided by 2.5 is just around 20. And that dividend, they currently pay a $316 million dividend. So with a $2.5 billion free cash flow, that dividend is very, very safe. So we're going to look at the valuation of the stock. Firstly, we're using discounted free cash flow. This was calculating the future free cash flow of the company, giving it a potential value of the future free cash flow, and then working out what the value is. So according to this model, it is actually has a fair price of $99 a share, which is 108, which is 48.43% discounted. So that number is looking pretty good because of what I said before, the 52-week high of 104, we can expect it to get there again. And if we look at the Buffer Graham intrinsic value, based on the earnings per share of $3.34 with an expected growth rate of 13.84, this actually gives a fair value of $120 a share, which is breaking its all-time highs, and a Graham price, which is, if you see at this price, buy and hold, $90 a share. So both models are actually very heavy on the buy, and they are pretty close as well, which is good to see. Means that this stock can be valued in many ways, but the share price for both of them is pretty consistent. And if we just quickly go to tip ranks and have a look at what the analysts are saying, they're saying it's a strong buy, 15 buying, 5 holding, 20 ratings in total, and they have an average at $100 a share, on the high side 120 and on the lower side 75. So they're saying 12 months in the line, you'll be definitely making money on that. 50% potential increase, even a bit higher. The stock could almost double. So let's have a look at some of the technicals. It's going to be a bit interesting to see here with that massive low, the 14% drop. And if we just go open up the moving averages, I like to look at a 50-day moving average, and we'll put this in green. So we'll put the inputs as a 50-day, and we will also put in the 2 other moving averages, a 100-day and a 200-day, which are other time frames I like. It kind of gives a slightly longer understanding of what the stock's been doing. So there is the 100-day in yellow, and finally the 200-day in red. I have that in red because it's a longer. So let's see what this is saying. So if we go back, you can see this was really the big price movement here in August. Price dropped massively underneath them. So that was a death cross here, and more death cross to come. If we look at when the stock had previously been under all 3 moving averages, you would have to go back to October of 2018, where the last time it was, and it basically continued for a couple of months and then bounded and went strength to strength. So I would say wait till we hit this point of resistance at the bottom, point of support. In fact, I was looking at this part. We are way down here. We have not had something like that in a while. So it should be a good buying opportunity just on that. This is very freak for the stock to go this much. And based on the fundamentals of what I've seen, I think the stock could be going up pretty damn quickly. I mean, even in the post-market, it's increasing a little bit. So I would say we haven't really seen anything like this. The price is so out of whack from the major moving averages. If you believe in the stock, it looks like a buy. Next, I want to look at is the MACD to see what that is. And I think that's probably going to tell a similar story. If we go open up the MACD, yep, you can see, and we'll just go to the last year as well. You can see, yep, the MACD has switched. So that would be negative. You want to see where it rises up, and then on the buy, you would buy it again. So if we look at times where it has gone positive, there was a positive motion, and you could have made massive profit up until then. Once again, here, you would have made profit there, and you would have sold. And then finally, down here, they crossed. And that one, you actually wouldn't have made money, but you can see the lines were crossing in the other direction. So it is very negative movement at the minute, but you can see that this has plenty of upside, definitely. And, you know, if it's getting back to $104 a share, if you're buying at 66, it's a bit of a no-brainer. And finally, what we're going to look at is the RSI. We'll close this down here. So the RSI is the Relevant Strength Index, and you can see, yeah, once again, it's in the oversold regions by quite a bit. The last time it was in the oversold regions was here in August, but then actually it continued to go down. That is not normally the case with these stocks. So normally RSI is quite a good one for this, but this stock has been all over the place. Even down here, you could have made money, but this is the lowest point it's been in quite some time. So the technicals on the stock, I'm not going to say aren't looking great as a whole. I would say the what I'm liking about this is the fundamentals. Technicals, I mean, the only thing here is that it's way below the major moving averages. So if you're expecting to rebound to that point, then obviously it would go from 66 to 70 in the short term. But the RSI, it doesn't seem to like it, and neither does the MACD. But I think let's just quickly go back to the Google sheet here. $99 a share with the discounted free cash flow, and then 90 to 120 on the Buffett-Graham intrinsic value. I think that's a lot more what I would say the stock is technically very weak. And also if you go to here as well, that's what this is Trading View. They're saying it's a strong sell based on the technicals, but fundamentally I'd say this stock is very, very solid. Right guys, thanks for watching. Please give a like on the video if you've enjoyed it. Really helps me out, as I say always, and subscribe if you're not already, and I will catch you guys next time.